Welcome back to Stocklabs for another market recap. This is for the week that ended March 25th. So third week of March. It was another decent week for the market. Indices were they were up, but underneath, it was a little more selective than sort of the everything bounce that we got the prior week. So just to see how our indices did. We've got the Q's up 2%, S&P up 1.9, Dow was up 0.2, basically flat, and IWM lagged down 0.7 for the week. So yeah, you can see like the big tech stuff sort of carried the market this week. Everything else, the rally for now sort of stalled out a little bit. Just looking at it, on the whole. Oil had another big week, so it had gone up to, I forget, $135, $140 for a couple weeks ago, when sort of the war rhetoric sort of had reached a fever pitch, and then it sold off hard. Not hard, but it gave back a pretty big chunk, and now it's sort of making its way back up toward, getting toward those highs again. It looks like it sort of wants to take them out. So I don't know if there's going to be a new catalyst that gets it there or what, but there's a lot of upside pressure in the oil market right now, which is sort of affecting a lot of other markets too, because that keeps CPI high, keeps the Fed in play. Oil prices obviously factor into all sorts of other prices in the economy, just because energy is an input everywhere. So it's tough situation for the economy, for consumers, for everyone. But yeah, this oil move doesn't look like it's over yet. So we'll just have to see. Bonds got whacked again. So same thing. A lot of inflationary pressure. This might be the worst week for bonds. I'd have to go back and look specifically, but I don't remember having TLT down 3.5% in a week in a long time, just off the top of my head. As far as our mega cap, terra cap, leadership tech stocks, they all outperformed this week except for Netflix. Actually, I guess technically Microsoft didn't outperform, but it was up. So Tesla, big week, up 11%. Apple up 6.6%. Nvidia 4.5%. Semiconductors had a huge week the week before, and you can sort of see some of the major semis extended that run, that bounce that they were making off the bottom. And then Google, Facebook, solid weeks. I forget. These might just, Facebook has been moving up. I think it's up 40 points off its low, something like that. Google has held up better the past, through the sell-off that we had, last month and into the start of March. But they're hanging in there. And then Amazon had a big week last week, but sort of has stalled out a little bit, just performed with the market. As far as our breadth industry-wise, materials obviously up a lot. They were the leadership group, with oil being up 8%. Utilities, kind of a surprise, up almost 3%. And another surprise is tech was mostly flat to down, despite the major techs, the major market cap techs carrying the Qs. So, and then everything else was sort of down to, flat to down. You wouldn't really think this just looking at the headline indices, but yeah, you could tell that the market overall, the rally that we were having off the lows, I'm not going to say that it fizzled out, but it's consolidating a little bit here, despite the the indices themselves walking up a little bit. Leadership sectors. Okay, top performer was cannabis. There was some kind of thing with some legislation. I don't know. This seems like it gets floated around every year, or every few months as something that's right around the corner. Didn't really look into the validity of it, but you are sort of in a midterm election year, so you might expect some more action, just whether it comes to anything, but you would expect people to be out talking about this sort of thing, because it's like it's an issue that voters have gotten more um, they've gotten more passionate about in the last several years. So it kind of gets trotted out as a talking point. Oil and gas, ag chemicals. So this is all part of that inflation trade. More oil and gas sectors, oil and gas pipelines, oil and gas. So yeah, you can see oil and gas was far and away the best sector to be in this past week, and then along with a few other sort of tag along inflation sensitive sectors were the rest of the leadership group. So steel, copper, aluminum, all the metals. Surprisingly, not gold. Well, gold is down here, but 2.5, 2.7% is I wouldn't say notable. Everything up in the sort of 5% plus range are these more industrial metals and the oils and energy. Worst performing sectors. Okay, home improvement stores. Not sure what's up with that, because the housing market is sort of on fire. Maybe people are front running some sort of bust in housing, but it is only one week's worth of performance. So you might not have to draw a huge conclusion from that. And then lumber down 10%. I don't know, some of these trades are, or some of these trends are, they've become just a little bit chaotic. You see, lumber had that huge run several months ago, crashed all the way down, and then sort of started to ramp up again. I mean, these are like, they're weird moves for these sort of niche commodities slash raw material sectors to be having. Residential construction was also down a bunch, sort of related to home improvement. Everything about the top 5 were all related to sort of housing. So maybe we will draw a little bit of a conclusion from some of this, that it's a trend that we have to watch. And then, autos also down. Now, autos, they probably should have been doing pretty well, because the used car market is, I mean, it's insane. You can buy, or not you can, but you have to buy a used car now is worth basically what it was, if it was new a couple of years ago or something like that, which is like completely backwards with what is supposed to be going on in the car market. But overall, not too bad. I mean, the down sector, some of these down sectors were down a bunch, but you can see there aren't that many sectors that are down over 5%. So overall breadth was pretty evenly split, which was kind of reflected in these overall sector trends, with the exceptions of basic materials sticking out to the upside, and some, a little bit of strength in utilities. As far as breadth from just sorting through market caps, I don't need to do that. So 1 to 5 billion market cap, flat, down 1/10 for the week. So not good, not that great. 17 bips for 5 to 10 billion, and large caps were plus 92 bips. Mega caps are up 150, and the Terra caps were up 1%. So not too bad. Basically everything, 50 billion and up did pretty well. Even 10 to 50 billion was up 9/10. I mean, that kind of underperforms the S&P. Actually, same thing with the 100 billion, the Terra caps, they also overall underperformed the S&P with, this 1%. S&P was 1.9, but the largest of um, of these stocks all had huge weeks. So if I sorted this by market cap, so these are all the very biggest ones, and you can see that they're all green here. Okay, we don't have a red one till Visa. So yeah, like we've mentioned this before, but the indices are not going to go down when all of these stocks are up. It doesn't even matter what the rest of the market does because these are all bigger than the rest of the market basically. Let's look at intelligence for the coming week to see what might be in store. Okay, TQQQ rated bullish, so that's the Nasdaq. And then I don't know what this ACV is. And BitQ, I'm actually not sure what's in this either, but obviously it's crypto related. Crypto has had a decent bounce off the recent bottom, kind of with the rest of risk assets. But we'll see if maybe some renewed interest on the crypto stocks comes back into play now that the actual coins made a little bit of a move. Sometimes there's a lag between when you see like gold, for example, gold will go up, but the miners don't necessarily tag along until gold holds, a certain higher level for a little while. Then the stocks get re-rated. So we'll see if something like that's going to happen with the crypto stocks. As far as what should be headed to the downside this week, so this list is quite a bit more populous than the bullish side, but okay, VIC. Well, let's sort this by word. Okay, so Soxel is supposed to have the worst week, which doesn't bode well for the Nasdaq. A lot of people say semis. So goes semis, so goes the Nasdaq, so goes the market. It's kind of how the flow. It's kind of like a line of thought people have. Okay, cannabis rated bearish, so people expecting the pop that we got last week to sort of fizzle out and head the other way. Austria, nothing to talk about with Austria. Okay, drip is rated bearish, so the oil trade will continue higher overall. Drip's a bearish ETF, it's rated bearish, which is overall bullish. And then transports are rated bearish, which is also not good for the market overall because they're sort of at least an old way of thinking or a long-standing way of thinking is that transports, sort of lead the Dow, and the Dow is an important index to some people. But okay, cloud computing also down. This would also be bad for the Nasdaq if semis are down, cloud is down, fintech is down. All of this stuff, if these are all down, I mean the Nasdaq's going to have tough week. Unless you really expected all the lifting to come from the Terra caps. And the rest of these, okay, another cannabis ETF rated bearish, and inverse big oil rated bearish. So it's another sort of indicator that the oil trade is headed higher this week. We've got DRIP and NRGD rated as bearish, and those are bear ETFs. And lastly, VIX is rated bearish. So could be a choppy week in the market. I mean, a lot of these sectors are, sort of looks like they're going to start to retrace some of the bounce they got, but maybe it won't be that problematic if the VIX is also falling. It could be more of like a consolidation than an actual start of a resumption of the downtrend. Which, speaking of the downtrend, this signal from March 14th on Monday, or Monday before last, will expire on Monday's close this week. So 10 days, we count the stats 10 days And then after that, we don't count anything else for, we don't backtest anything for, for future returns from there. So we got everything that we wanted out of this signal. So if I look at 12-month oversold on the hybrid side, we would, from when that signal hit, we were expecting, 2 to 3% bounce in the S&P, and we got way more than that. And I don't even know what it was, or I can look here. So, okay, just to make it clear, 12 months. So we were at 417.12, and we're at 452 something now. So what is that? Something like 7% or 8%, something. Or it's got to be over 8% for this bounce. And if you're expecting 2 and you get 8, that's pretty big outperformance. So now this signal, once it expires on, assuming we don't give back 6% on Monday, but we come out with 8% on this oversold signal, is that's a big win for Stocklabs and anyone that acted on it at the time. So from there we'll kind of start gravitating a little more towards intelligence, just because this is giving us more real-time signals until we get another oversold signal somewhere down the line. But I don't know if there's any big economic stuff coming out this week. There's obviously always the war that's gives you new sound bites and new happenings every minute of the day. But I think probably we're just kind of consolidating, chopping, and coasting a little bit into the end of the month. Pretty good week for the overall indices. A little bit more difficult from a breadth perspective. So you're kind of focusing on the larger cap stuff again for now, which was a pattern for a long time in this market last year. But pretty good week. Things are looking okay. Oversold signal paid out. We'll talk to you guys next week, and hopefully market can keep it up.